Oracle just reported their quarter three fiscal year 2025 earnings. And while the stock is down roughly 1.4% after hours, it did share a lot and a lot of great insight about one, the AI market, which is various growth opportunities, and a lot of good news, in my opinion, for AI chip companies like NVIDIA and AMD. So in today's episode, we're going to take a closer look at what Oracle had to say about the overall AI market. And I also want to take a closer look at valuations. Now, before we go any further, you guys might be like, Jose, you keep saying that we are seeing all these great news for the companies, and we continue to see red days for a lot of these stocks. And I want to say most of the news, if you do watch my channels, is more for the long-term thesis. Is the thesis still intact for long-term investors? It's not to have some form of effect in the stock price right now, but it's more to build that bullish case of why I'm investing in certain of these AI chip companies. So while this market can continue to go down on days like yesterday, maybe even days like today, I think in the long term of things, the thesis is still intact, with things like Oracle earnings confirming that thesis. So let's get started. But if you want to get more semiconductor news for free, make sure to check out my free daily semiconductor newsletter, whatthechiphappened.com. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, I want to look at PE ratios for Oracle. And Oracle, I'm going to say, is trading very cheap at the moment. I used to think it was a little bit more expensive, but the more and more I look at it, the cheaper it seems. So current PE ratio is 36.38. Forward, which is the end of this fiscal year, remember, they just reported quarter three. So this is less than about less than a quarter from now, right? Because the quarter for them ends a little bit earlier than their earnings call, is expected to be roughly 22. And now forward 1 year is 21.25. I believe the market doesn't know how to kind of price their Stargate project, which is that massive AI project, and that can actually make Oracle look a lot cheaper than it is right now. Oracle right now sitting at a market cap of $416 billion. It is sitting at 148. Now, year to date, the stock is down roughly 10%. In the past year, long-term investors are going to be pretty happy with the stock still up over 30%. Now, from its overall 52-week high or so, the stock has pulled back around 22%. Now, I mentioned this is kind of great news, in my opinion, for the AI chip players, and we're going to see AMD was actually one of those players as well. And AMD's forward PE ratio is 20, and forward 1 year is 15.26. Now, again, I think right now is when the bears are lively, and they really are enjoying this red day and these red markets. Like I mentioned in the intro, red days can continue, but I do believe right now the risk to reward ratio for some of my favorite semiconductor companies like AMD is amazing for me as a long-term investor. NVIDIA, another one, forward then at the end of this fiscal year is 23.81. Forward 1 year is 18.66. Again, for at least NVIDIA, you really have to be bullish in the AI space. Maybe for AMD, you could be bullish in the AI space, but you also have other opportunities to help it grow. But right now, in forms of not just forward 1 year, which is the next fiscal year, but within the next 12 months, a lot of these companies are trading way cheaper than a lot of big tech players, and they do have various growth opportunities. Again, I'm not going to discount the fact that we continue to see volatility for tech plays because of things like tariff macroeconomics. Now, in my opinion, that is pretty much short-lived, and short-lived for some might be different, but as a long-term investor who doesn't need their money from their portfolio anytime soon, I can live a year or two of kind of bad stocks as long as I get to accumulate more and more shares. For those that were not familiar, the similar type of comments that I'm seeing today was when I was talking about NVIDIA, when pre-split was now post-split prices was probably at below $15, maybe even below those numbers as well. So I like to see the comments being filled with red because it shows to me that investors are getting extremely fearful. And usually once we start to see everybody turn bearish, that's when kind of the market can turn bullish. But I'm not here to time the market. I'd rather kind of just dollar cost average, increase my positions as I see these valuations pretty cheap. All right, so let's kind of jump into Oracle, right? So that's the main topic of today's episode. And Oracle did report their Q3 2025 earnings. And unfortunately, they missed in earnings per share and they did miss in revenue. Not by much, but there was a miss, about a 1.8% miss on revenue and 1.3% miss on earnings per share. Now, I actually want to start off with what was very crucial and important for the AI market, especially for AMD and NVIDIA. And let me just say, throughout this episode, we're going to see how the AI market is still in full swing. The demand for AI solutions is still very, very high. But this is something that Lawrence, the co-founder and chairman and CTO of Oracle, shared specific details about NVIDIA's GB200 cluster, and not more important, equally important, depending on what company you own, a huge cluster for AMD's upcoming MI350 GPUs. So let's take a quick listen.
We are in the process of building a gigantic 64,000 GPU liquid-cooled NVIDIA GB200 cluster for AI training. Our multi-cloud business at Amazon, Google, and Microsoft grew 200% in the last 3 months alone. In Q3, we signed a multi-billion-dollar contract with AMD to build a cluster of 30,000 of their latest MI355X GPUs.
All right, so the first thing is, a few days ago, we actually covered the 64,000 GPU Oracle discussion, and this is going to be big. I mean, the GB200 is an amazing chip system, and to be building a cluster this big, this is going to be one of the biggest we've heard of so far in the public market. Now, the other thing, as an AMD investor, we do know that the MI350 was being pulled ahead of schedule, and then building a 30,000 cluster on that end is also pretty impressive. Now, I want to kind of also say this, just because we're seeing one cluster of 64,000 GPUs and one cluster of 30,000 GPUs, and this seems like now AMD is taking about 33% of the market share and NVIDIA is taking about 66% of the market share here. That's not true. These are kind of just GPU clusters. I'm gonna still guess and Oracle is still going to mainly be purchasing huge market shares of NVIDIA GPUs. But at least it gives AMD a nice chance here of showcasing the MI350, and maybe we will get more hyperscalers also entering with the MI350. So Oracle was one that already had the MI300. This isn't a new customer, but during AMD's latest earnings call, they did mention that they are seeing great traction from net new customers. So I guess this is a little bit of data that can be shown to say, yes, maybe AMD's MI350 could be a strong grower in the second half of this year. If we kind of pull back and learn a little bit about the AI market, Safra, which is the CEO, mentioned that this was their strongest booking quarter ever by huge margins. They added about $48 billion to their backlog. Their RPO balance, which is remaining performance obligation balance, is now $130 billion, up from $97 billion last quarter and up from $80 billion last year. The growth of 63%, that's a growth of 63% year over year. And get this, it does not include any contracts with Project Stargate. The RPO figure is the leading indicator of demand for cloud services solution. So again, right here, we can see that the demand for AI solutions continues to grow. And this Stargate project is going to be even massive and allow this company to take and grab more market in the cloud industry. Again, this is very bullish, in my opinion, for the AI space, because we are seeing that Oracle has a backlog of AI capacity needed. So if you have that kind of backlog, you're going to need to buy more AI infrastructure to be able to fulfill a lot of those contracts. Safra does talk a little bit about the delays in Blackwell. She says that their consumption revenue was up 57%. Demand continues to dramatically outstrip supply, but they do expect components delay that have slowed the cloud capacity expansion this year should ease in Q1 of fiscal year of 2026. So pretty soon. So that's about 2 quarters from now, because remember, in their Q1 of fiscal year 2026, right now, they just reported Q3 of 2025. They are currently in Q4 of 2025. So for NVIDIA, we're going to continue to see kind of this ramp process of the Blackwell. And I do believe this is why NVIDIA, during their most recent earnings, mentioned that they are increasing capacity a lot faster than expected because they are trying and trying to meet the demand that they previously had promised to their customers. Now, Oracle is definitely a company that doesn't have huge capital expenditure versus some of these other big tech players. So they expect fiscal year 2025 capex, which ends in a quarter, to be a little bit more than double of what they spent last year. So around $16 billion. And they are always careful to the pace and align of their capex investments appropriately and in line with booking trends. So I'm going to guess next quarter, we're going to get the fiscal year of 2026 capex, but overall 16 billion. 16 billion is not that 80 plus billion that some of these other big tech players are doing. So maybe some investors might be wondering, Jose, why is this not as huge as some of these other players? And it is crucial to understand that Oracle is first not the size of those other players, right? They don't have the same type of market share as your Amazon, as your Microsoft. So that's the first thing. The other thing is all those other players like Google, Amazon, Microsoft, and Meta have a lot of internal AI solutions that they also need to power, right? They need to power their Gemini, their OpenAI. So they have that other capacity as well, not just external. So Oracle at the moment is purely external. But Lawrence also mentioned a few things.
So we can start our data centers smaller than our competitors, and then we grow based on demand. So building these data centers are expensive, and they're really expensive if they're not full or they're not at least half full. So we tend to start small and then add capacity as demand arises, and that allows us to have higher utilization. That's one thing. But it's really the combination of starting smaller that affects and growing with demand that affects capex, and then overall margins. The fact that we have a high degree of automation, which lowers our labor costs dramatically. By the way, more important than lowering our labor costs, with no labor, there's no human error, there's no human mischief. So we're much more reliable and much more secure because we don't have a lot of human beings in our data centers.
And that's pretty interesting to note that it does seem like Lawrence believes that Oracle is able to build data centers faster than their competitors. And as we're going to see later on, that was one of the reasons Oracle was kind of chosen as kind of this project leader or this infrastructure play for the Stargate project. So here we can see that Lawrence, when asked about the Stargate project and kind of what was their strength, like I mentioned a few minutes ago, the capabilities they have is to build these huge AI clusters with technology that actually runs faster and more economically than other competitors. So if you are going to be running a lot of AI workloads, in the long term of things, you're going to need to be able to run the one that is doing it at the cheapest per hour. Lawrence also kind of just reconfirmed that they got to over 130 billion in RPO without any transactions from Stargate. So again, Stargate looks to be the biggest AI training project out there, and they expect that this will allow them to grow their RPO even higher in the coming quarters. And they do expect to sign their first Stargate contract fairly soon. Now, throughout the earnings call, Lawrence also kind of discusses that there is still big opportunities for training as training continues to get bigger and bigger. And inference is also becoming pretty strongly as kind of AI become AI agents and kind of these AI factories running nonstop. Now, Lawrence does talk about one of the strengths that they have, and this is Oracle Database 23 AI, which allows companies who have, because Oracle is known for having a strong database, and that database is something that not many other players have or have to the extent that Oracle has. So with this database, they have created this ability to convert your data into vector format that is understood by AI models. So then individual companies can have some form of training with their data. And this can automatically be done at Oracle's database. And this allows them to have more inferencing at the end of future growth opportunities. So they have obviously AI training, but they believe inference is going to be crucial, especially as we kind of go into this world where every kind of software application will most likely be some form of AI agents. And if you control that data, if you control that infrastructure, you have a better chance of winning the contracts in forms of inferencing, in forms of training, and the list goes on and on. Now, for quarter four of this fiscal year, analysts are estimating about $15.6 billion in revenue, up about 9% on a year-over-year basis, and earnings per share up to $1.64, up 0.6%. So I think Oracle is now starting to look attractive, in my opinion. Again, if you have been following my channel, you do know that when we saw this price over 180, I wasn't too happy about it. That doesn't mean I sell. It just means I don't really accumulate more, because over time, I do believe a lot of these stocks will continue to go higher. But now at this stock price of 148 and the growth in the AI market, we kind of saw those PE ratio valuations. I think Oracle is looking attractive. Again, this is another stock that is going to be very dependent on the AI market. And if the AI market does not evolve or innovate as quickly as one believes, this can definitely see stock price decline. So always keep in mind how much of AI exposure you might have in your portfolio before ever thinking about adding more and more exposure to it. So take care, have a good day, and see you all next time.